After last Friday's enormous smackdown, silver's price dropped more than it had in years. And here we are, Tuesday, with a precipitous decline of more than 8% in the price of silver. Let's discuss what went wrong and why silver's price has reason to be optimistic about the future. Then let's go exploring. I agree with that. The metal market has been a veritable carnage recently. Simply said, there is no alternative. Silver's price has plummeted today. A precipitous decline has occurred. This sort of behavior is nonetheless to be expected in certain respects. However, it appears that the rise whenever it goes up is never as significant as the increase when it goes down. Consolidation, then. A huge sell-off has occurred. What we are witnessing here is panic selling. When it comes to selling off profits, the markets are clearly in panic mode. Therefore, this does not surprise us in all respects. Just moments before the market closes, here is the tape story on precious metal prices. With a loss of 5.3%, gold fell to $4,025. Subtract $232.10, gold remains within the $40 to $100 range. While silver has fallen 7.4%, gold has risen significantly. This very second, gold has dropped $3.88 to $48.57. I predict that we will witness its return to the market very soon, even though it just broke through the $50 barrier. Also impacted were platinum, palladium, and rhodium, with palladium platinum seeing a decline of more than 5%, and palladium receiving a 6.27% fall. The moment to buy is now, everyone. You should look and see during these huge smackdowns. I haven't looked at many sites, but Summit Metals is probably going to be rather fair. However, you could visit Summit Metals to see if they have any specials available to you. Also, to witness firsthand the excellent customer service, click the link in the description below. Be sure to mention that Uncle Sal sent you. This sort of thing happening with silver shouldn't come as a surprise because it is one of those metals that is quite volatile. It didn't rain quite as much today, which shocked me a little. I mean, what's the reasoning for this? I will be making reference to two works. For starters, this is an intriguing perspective on the current situation and the reasons behind the precipitous decline in the prices of gold and silver. Brian O'Connell wrote this: 2025 was a banner year for commodity investors, who rode the wave of high prices for commodities like gold and silver, which provided a safe haven for those looking to diversify their holdings. We should expect this kind of thing in 2025 because we have been spoiled thus far. As I've mentioned numerous times on this channel, we just have to deal with the unexpected, and this is just another example of that. Today, we took a serious knock. In the last year, the value of gold increased by almost 56%, and according to the benchmark SPDR Gold Shares ETF, it has increased by 60% so far this year. However, keep in mind that this is just a price increase and not a change in value. Its worth can be quantified in terms of money, but it goes beyond that. Even more impressively, silver's price has risen 62.6% in the last year and 78.4% in the year thus far. But precious metal prices have been falling for the past week, with gold down 2% and silver falling 5%. Investors' allocation to precious metals has changed. According to Daniela Sabin Hawthorne, a senior market analyst at Capital.com, the upward momentum in gold and silver appears to have lost steam at the beginning of the week. A lot of people are now involved in the trade. Reversal is not totally unexpected because N was running slightly hot given the levels of both markets. Despite the short-term problems with gold and silver, Hawthorne has stated that commodities investors shouldn't panic just yet. Since a correction was inevitable, profit-taking is likely to be rampant today in the precious metals and silver markets. The fundamentals, however, remain unchanged, with long-term support remaining in place. Even while there had been encouraging trade news, the rally's intensity over the previous month has been unwarranted, increasing the likelihood of a further retreat. The price of gold and silver had turned around in the last week for reasons other than that. The reversal of last week's increase to margin requirements on the Shanghai market is due in part to an unexpected factor affecting the prices of gold and silver, prompting a sell-off that swept across global markets, particularly the futures market, beginning in Asia. We can see that portion of the present rally is based on speculation because of the steepness of the retracement. Physical supply constraints, particularly in relation to the LDMA, have not yet eased to the same extent and may be causing investors to lose faith in silver, which is another reason for its recent surge. As speculators and lesser hands are driven out, a steep sell-off is not unexpected. Elliott, however, claims that this would not halt a surge fueled by physical lack. At this very moment, platinum is unaffected. Additionally, other metals markets are feeling the effects of the geopolitical tensions between the US and China. Deals involving rare earths have been finalized in Australia. Also, I consider that to be a significant development that may have had an impact on part of what happened. While Kitco is covering the largest one-day drop in silver prices in 4.5 years and the most extreme volatility in gold prices, the former is garnering a lot of attention. Both precious metals and the markets for them have long-term upward trends, but analysts say there's space for a decline. As a result, we are witnessing what may happen in that area. As the North American trading session got underway, the selling pressure that started with the opening of the London market did not let up. Gold and silver were sold off, according to some analysts, because of rising optimism over the US-China trade conflict and the record-high equities prices in Japan's Nikkei 225 index. As the market has witnessed tremendous bullish momentum, some argue that this is mostly due to technical selling. The experts at TD Securities believe that the recent consolidation of gold prices is solely due to profit-taking. On numerous fronts, our positioning screens are extremely rapid. No amount will convince algos to purchase more. A vol control fund's leverage and risk parity are close to the limits that make sense. Due to over-the-counter uncertainties, macro funds are probably at their limit. The central bank's bid has dropped significantly, and there have been no blocked acquisitions by the central bank. Buyers' strike in China continues while retail involvement is low. Eliminating losses is just the beginning. And that can indicate that there is a possibility of purchasing a stock that you can subsequently sell. That was implied in a comment someone made on my video earlier today. So, it's a wonderful sight to behold. Well, my video I made earlier today on gold ended up on Bill Maher's late-night talk show, thus it made it into mainstream news. Observe that film. At the very bottom of this video, you'll see a link to it. Now, in a post that went live on Tuesday, according to Fawad Rasakasada, a market analyst with Citi Index and Forex, today's sell-off was inevitable considering the magnitude of this year's gain. Some would ask why it took so long. Investors have begun to profit from the record-breaking run, whether voluntarily or involuntarily, due to the large number of purchases made recently. Following an extended period of one-way traffic, the effects of profit-taking and long-side liquidation have now introduced some noticeable selling pressure. Yeah, that's right. Additionally, I will explain that we should consider profit-taking as an inherent component of a market system. I believe this is where the natural market really shines. People can also speculate that suppressive forces are at work. It is still a possibility. In contrast to the 977 million ounces that changed hands following Friday's smackdown, it will be fascinating to see the figures for the amount of paper silver that changed hands today. How much more could be transferred using this method? Of course, this isn't real silver, it's only paper. But keep in mind, folks, that the basics are still the same for silver, as I've merely hinted at in a few of these pieces. Silver is continuing doing well, and I believe we will discuss $50 silver again, possibly very soon. Although we may observe a reduction or leveling off of the selling pressure, I am unable to envision much more of it at this stage. Be advised that the Federal Reserve is scheduled to convene soon, during which they are expected to decrease rates by an additional quarter point. In the upcoming meeting, I highly doubt that they will reduce by half a point. The probability statistics for it have not been reviewed recently. Regardless, other things are happening and other geopolitical issues are present. In addition to the fact that Trump and Putin have not yet set a date to meet, the situation in Gaza has recently escalated before settling back into a truce. When that ends, how long will it be? I am uncertain. However, that isn't getting much attention as we try to resolve the conflict in Gaza and deal with the issue in Lebanon. In the past week or so, there have been a number of explosions in that area. However, doubt persists on a global scale. Inflation is still an issue, though. Keep in mind that the M2 money supply is being increased by the Federal Reserve. QE done in a roundabout way. When it comes to silver, we are also currently seeing a backwardation phase. The spread between silver's futures price and its spot price is around $1. This suggests that the LBMA is still under some pressure, even though silver is being sent to fill that gap. Further, I believe it will. Things will probably settle down. Prices may remain stable for some time as a result of that. That stabilization, though, I predict will remain over $40. That may sound ridiculous to remark just moments before the markets close, when the price is still $48.59. But I still believe we will revisit $50 before the year ends, and I think we're doing fairly well if we can hold off above $45 at this point. That's my take on it, guys. Use the space below to share your opinions with me. Hopefully, you have gained some useful knowledge from this video. Please help us out by giving us a thumbs up, sharing this video, leaving a comment, and subscribing. We really appreciate you watching.